What is up, everybody? It's Stas here. Welcome back to another video. So today we're going to be going over 15 stocks to buy right now in this week in the stock market as we're getting into arguably the most exciting time period there is, and that is the start of the big tech earnings. We have Apple, we have Microsoft, we have Facebook, we have AMD, and so many other companies reporting earnings this week that we are going to cover in this video. And I also want to break down where my head is at in the markets overall right now as a trader, as an investor. So if you guys find value, sit back, relax, hit the like button, subscribe to the channel. Make sure to get yourself into that Strive Smart Discord chat, the Facebook group. Get 4 stocks from WeBull and $30 from M1 Finance. All of those are free and linked right down below in the description box. So let's take a look at what SPY, the S&P 500 ETF here, has been doing over the past couple of days. Well, you guys can see it right here on this 5-day, 5-minute. If it wants to pull up, there we go. We can see it was a pretty solid week last week. We went from 377 to 385. We hit 385 for 2 trading days. We failed at that point. And then on Friday, we also tried to break out of 385 and we failed again. And then we ended up closing on a downswing, and after hours was red as well. So at this point, heading into this week, and you guys can see it here on the hourly chart, we're looking like the S&P, that is SPY, it looks like it wants to maybe test maybe like 380, maybe 379, right around this 180 SMA on the hourly chart. So I'd look for a pull down, maybe to about 380, and we'll see what the futures are looking like later on. They open up at 6 p.m. Eastern Standard Time. So if you guys are watching this video, go check out the futures. If they're gapping down, hey, maybe the SPY, S&P in general, markets in general, they could go lower. SPY could go 379. If that were to break, maybe mid 370s. That's where I think it could go. So watch out for those levels. And again, watch out for the futures market. And let me know in the comments if you guys are looking at the futures market right now, what the market is looking like. So now we have a bunch of stocks, 15. I think we might even have 16, honestly. But I feel like in the title, you have to put a more round number. So we're just going to go with 15, but there is 16. Anyway, number 1, we have Starbucks, SBUX. And most of these guys are reporting earnings this week. And Starbucks, you guys can see, they are reporting earnings on the 26th. And based on this hourly chart, it seems like this has been playing out beautifully within this downwards channel. You can see resistance at 107. We found support 102, popped back up 106, got rejected, went back to 101. We just recently went to 106 again. And you can see again clearly it's playing perfectly in this downward channel. And with earnings coming up here, I'd love to see what direction Starbucks ends up getting pushed into. And me personally, I'm not the biggest fan. You guys know this for the most part, but for the new viewers, I don't like buying stocks before earnings, so I'm not going to do that with any of these picks. But if we're able to get some direction after earnings, I'd love to see that and be like, okay, if Starbucks breaks out maybe above 105, 106, it breaks the resistance of this channel, hey, that could be a move that we could end up capitalizing on the upside. And of course, we could also maybe end up shorting this, maybe down to about $100, maybe under 100, especially if they don't have good earnings. And as always with earnings, guys, forward guidance is very important. So watch out for that with all of these companies, as that really moves the share price more. There's no, I mean, just from my experience, right? There's no official stat on that, at least that I know of. But I feel like forward guidance, if a company has crap forward guidance, the stock drops like a brick a lot of the time, and you guys could agree with that. So watch out for that. That's my thoughts there on Starbucks. We also have J&J, guys, which has been a killer investment these past couple of months. And you guys know they have a great dividend as well. I don't know what it is off the top of my head. I own J&J. It's probably like a 2.5% dividend, something like that. And this is one that I, again, own. I've been buying this since about 140, 135, 145, 150, even a little bit. And now I'm just holding on to my position, riding out those capital gains and, of course, that dividend. And they report earnings here on, let me take a look here, the 26th. So the same day as Starbucks, I believe. So that's 2 days away. We have earnings on J&J on Tuesday. And based on this trend, this thing has been a beautiful uptrend. What else could we say? We hit all-time highs at 165. We could go a bit higher, but I wouldn't necessarily force this, especially before earnings, until we get a pull down and maybe more direction after earnings. That would be a great sign for me. I think if we could pull down overall to 160, right around this 50 SMA on the 4-hour chart, that could be a good spot for J&J. So I'm watching out for that here on this stock. And there's probably some other stocks that I think have more upside and more potential necessarily than J&J, and we'll talk about those in a little bit. And one of them, honestly, guys, is AMD, Advanced Micro Devices. They also report earnings this week, also on the 26th. And we talked about this one a couple videos ago last week, which is why it's so important for you guys to subscribe. If you haven't done that already, subscribe to the channel and keep up with the daily updates, because we talk about these stocks every single day. And we talked about how AMD was finding support at 88, 89, 90 bucks, right around the uptrend it's been holding in the past. And we saw how, and we talked about how if it squeezes up to 95 bucks and ultimately breaks out of that level, there's going to be a bigger squeeze to 99, maybe even higher, and I think it's going higher. That's my opinion, but I think it's going higher up to $100 plus, and that could be, what does happen. I'm not saying it's going to, but maybe after this earnings report and the weeks following it, we'll see. But you guys got to watch it. I for sure am. Anything above 95 is it's going to go up, in my opinion. So we're seeing that with AMD. Microsoft is another big company, and this is just going to be such a big week, guys. They're also reporting on the 26th. And the thing with all these big companies reporting, we get an idea of how the big players are doing out there, with their revenues, their profits. So we can kind of gauge how business looks, and this could also, send the stocks a lot higher if it's better than expected, or lower if it's worse than expected. Like, oh crap, this is doing worse, and then the stock could go down. Who knows? We have to see. But Microsoft, they're reporting here again on the 26th. And this has been a breakout. I mean, we broke out of the wedge on this 4-hour. We also took out 217, 218, which was a level we were talking about a couple weeks ago, if you guys watched. And now we're well above, not even well above. Now, actually, in fact, we're at 226, which is another big resistance from back in the end of 2020, back in the middle towards the beginning of November, and back in the beginning of October, right around 225, 226. That's where we struggled. So I wouldn't necessarily rush into Microsoft, but I think it could see a nice gap up. If we really see a gap up tomorrow, let's say, I think we could see it move to 232. I mean, that would be a nice couple percentage points there, 2-3%. So watch out for that with Microsoft. And if 232 breaks, we might be going higher to 35, 240 even. We have to watch it, guys. We have to watch it. That is Microsoft. Apple is probably the one I'm most excited about. I really want to see what their sales, revenue, all that good stuff, profits, I want to see what that's looking like. They went up a ton last week. You guys can see it fill the gap completely from 126 to 138. And I don't want to say I told you so, but we called it out. We talked about it, and I kind of told you so. And I made some money with Apple. I'm sure a lot of you guys made some money with Apple. And at this point, yeah, there could be some more money to be made, but it's risky because you have to rely on a very strong earnings report. If they disappoint, if they disappoint a little bit, that's not going to be good at all. You're going to see the stock drop, in my opinion. But if they outperform and they do a lot better than expected, and the iPhone sales are just incredible, this could go much higher, 145, maybe even, who knows, if it goes parabolic, who knows where it could go. But yeah, watch out for Apple. And even if they do decent, in line with expectations, maybe that could even sell the stock off. So you guys got to be careful, right? And I'm not saying it's going to do bad. I'm just saying approach with caution. Be careful. That's Apple. We also have Tesla, guys. Oh, man, this week is going to be crazy. We have Tesla reporting earnings on the 27th. So that's what? On Wednesday. So watch out for this one, guys. And off the top of my head, what I'm looking at here is kind of a wedge. And I don't want to say, gosh, it kind of looks a little bullish. I'm not going to lie. It looks a little bit bullish here based on previous times we've made these types of patterns as we've sold off, consolidated for a bit. You guys can see we did this ascending triangle a couple weeks ago. If you guys can see that back in the beginning of December, we got into this ascending triangle and broke out. And we ran up all the way to 800. Now we're consolidating into this wedge. And if we take out 850, it could be another leg up. So just watch out for Tesla. A lot of people, it's crazy the way it works. A lot of people are like, oh, it needs to pull down, it needs to pull down. Then it keeps going higher. And that's also risky. You guys got to be careful. And it could go much higher. We just really have to watch it. It's that stock that you guys can't really predict what it's going to do. It always shocks. It always shocks people. So don't be shocked. Let's put it that way, guys. And we have Facebook, another big tech company, reporting earnings here. They are reporting on the 27th. And out of all of the big tech names right now, I think Facebook has the most, I don't want to say the most upside, but in terms of the current charts, it seems like they are on the brinks of breaking out, as opposed to Apple. It already did break out. Amazon, it already did break out to a certain extent. And what else? We have Google. They definitely broke out. And same with Microsoft. But Facebook, it's still kind of in this wedge. You guys can see it's fighting resistance at 275, 280. So if it breaks that, all I'm saying is, guys, this could go up quick. Maybe 290, straight to 290. I can easily see that. And from there, I think we're going 300. And you guys are probably like, Stas, didn't you sell Facebook the other day in your M1 account? I did. And the reason is, guys, is because I was oversaturated, or what's the word? I was too deep into the big tech names. I have not Apple in that account. I have Microsoft in that account. I have Google. I have Amazon, and I had Facebook. So I had to cut one of them, and it doesn't mean that I'm bearish. It just meant that I wanted to cut profits and diversify a bit, and I ended up buying some Raytheon, which I think is a great company. It's a bit cheaper, in my opinion, than Facebook. And they have a pretty awesome dividend, which I love dividend stocks too, guys. I'm not just a crazy trader that likes growth stocks only. I love my dividend stocks, and I own them in that M1 account, which you guys can go on my channel, check out the playlist. I've made that account from $0. Now it's over 10K, and we're going a lot higher. So go follow the journey, and I'll just link it down below. And you could also get, if you want, $30 from M1 Finance, link down below. So that's Facebook. Watch for 290, 300. We could be going even higher than that. Who knows? But check that one out. Boeing is another one. BA. This is one that is in a classic downtrending channel. You guys can see it here. We hit 240, and we actually called this out. And you can't always call the top out, but if you guys remember a couple weeks ago, we were talking about Boeing, how quickly it ran up all the way to the previous resistance from back in June. And I told you guys, watch out for 240. It might not break. And now fast forward, it didn't break. It's at 205, and we might be going even lower, maybe to test the high 100s, or not kind of the 100s, the 190s rather, 195, 190. That's where we could be going if this were to hit a higher low, which is or a lower low rather, which is possible. So I'd watch out for that. And they report earnings here on the 27th. So 26th, 27th, a ton of companies are reporting. So I wouldn't go long necessarily on Boeing until earnings came out. We see guidance, EPS, revenue, all that good stuff. And until we broke out of this downwards channel, which would be anywhere from 210 to 215, 220, those levels, right? So that is Boeing. We have Visa as well. Visa is one that I'm very excited about. This is probably one, I'd say if I were to make a top 5 out of this 15, these 15, 16 stocks we're going to talk about, or even a top 3, Visa would be in it. We can see Visa here got rejected at 220 on this yearly chart, and overall we're uptrending, we're holding the uptrend. We're right around the 180 SMA on this yearly chart, which is where we held support recently, a couple weeks ago, months ago, at about 180. And this is where I think we're ultimately going to hold. And from there, I think we could squeeze up. I'd probably say maybe around $220, and you guys can see it on this 4-hour chart. If we did that, that'd be around a 7% move. And one thing to note, we are not out of the woods quite yet. Yes, we are holding right around this high or low level. That's fantastic. That's beautiful. But we haven't broken the downtrend on the hourly chart yet. You guys can see that. And in fact, on Friday, we continued the downtrend. So I wouldn't go long until Visa gets above 205, maybe 207, maybe 210 is where we fully break out. And you guys could add at these levels, but you have to understand, you're adding before the confirmation, and you have to be okay with that. Keep that in your head when you are buying in, as that is a little bit more risky, not going to lie. But overall, that's Visa. Watch out for it. They report on, the 28th, so that's going to be fun. McDonald's is another one. MCD, guys, this is another stock that I own. And out of all of these stocks, I own a lot of these stocks. I own most of these stocks. Really, guys, I really own most of these stocks in my portfolios. And McDonald's is another one I own. They pay a great dividend, and they have earnings coming up on the 28th. And this company, I don't want to say got ahead of itself. The stock did a little bit, but it seems like investors think that because the stock has just been downtrending for the past 2-3 months. And what we see here is a head and shoulder that played out on McDonald's. Let me show you guys right here. You know I'm the head and shoulder specialist. That's what you guys call me, right? Yeah, I don't know. Someone coined that in the comments. But yeah, you can see the head and shoulder right here, and you can see we dumped down. We're still on this downtrend. We're holding about 207, 205. We aren't breaking out of 215. And we're also seeing potentially a descending triangle forming on this chart, if you guys can see it. So watch out. If we end up dumping down and breaking 200, I wouldn't want to touch that as a swing trade. Maybe as a long-term play, I might nibble a little bit more and average more into my position at that point. But if we were to dump under 205, 200, I wouldn't touch it as a swing, but I would on the flip side if it did break 215, 220. You got it, guys? So if it were to break 215, 220, we do something like this, right? Maybe we get to about 230, 235. I could see that after a long couple months of just really downtrending, consolidating, and not really doing much of anything. So that's McDonald's. Watch out for them. MasterCard is another one, guys, which this chart honestly looks a little bit sloppy, but bear with me. Bear with me. What we're seeing here is, let me just redraw it, honestly, for the sake of the video and for the sake of me just, looking at this with fresh analysis. What we're looking at here is, all right, we're seeing a bit of a wedge forming, and within this wedge, we have a lot of different levels of support. Actually, just one main one at about 320, 325. We're close to that one right now. And we have a main resistance, I would say, right around 345. So at this point, you guys can see on this 4-hour chart, we are struggling right under the 180 SMA and the 50 SMA. We hit a lower high there. That's not good. It looks like it wants to dump off and test 325. If we were to break anywhere under 320, guys, here on MasterCard. Stay away. I am not touching it as a swing trade, but in my long-term account, I'd probably buy anything under 300 on MasterCard. But just watch out. If 320 were to break after their earnings report on the 28th, that would not be a great pick, in my opinion. And one that is looking pretty attractive right now is Caterpillar. And this one has a ton of momentum. Hit $200. Now it's at $190. It pulled back about $10. That's a nice 5-6% that opened up. And I'm actually rooting for it to go lower. Honestly, I'd love to see it go maybe 185, 180, right around the 180 SMA here on the 4-hour chart. And they report earnings on the 29th of this month. So 5 days from now, what is that, Thursday or something? They report earnings, which is going to be exciting. And I would like to play anything here on Caterpillar, anywhere from 180 to 185 I'd get in, maybe even 190 if we were to just break out of this little downtrend it's been on the past couple of days. The second it does break this little downtrend, I think that could be a good opportunity. That would be putting the stock anywhere from 194 maybe to 193, so that could be a spot to enter here on Caterpillar. So those are the main, that was 11 stocks, guys, and we did that in under 20 minutes, well, right around 21 minutes. And we have 4 other ones that are actually not reporting earnings. These are ones that I actually have some positions in, and others that I'm just watching. One of them is Chewy. Chewy is one that I'm just watching. I don't have a position in this one, but this one's down about $10 from its peak. You guys can see that. It's down about 10%, and it's actually uptrending into that resistance. So we're in this wedge, and I'd love to know where, and I'm going to be waiting to see where it does break out. And if it breaks anywhere above 106, 107, 108, I am in, and I think this is going back to the 1-teens, maybe 115, 13, 17, 18. We'll see, but I think that's going to be a breakout here on Chewy. And another one that I'm in, remember Chewy I'm not in, but Tattooed Chef is one that I'm in here. I got in this one on Friday as a swing trade, and I also bought last week as a long-term investment as well. And this is one that I like anywhere above $24.50, $25. I think we're ultimately going to fill the gap up to $27. You guys can see that's the big resistance here on this 4-hour chart, stemming back from a couple months ago, a couple weeks ago, right? So if it could go to 27, I mean, guys, that is about an 8 to 10% move just like that. And I can see this stock going to $30. So that's Tattooed Chef. I love this company. I'm watching it. I have money in this one. And another one that I have money in is SBE. This is one that I have a swing trade in. This is actually one of my bigger swing trades right now. And I see this ultimately going up to $43. That's my first target. My second one is 45, 46. And we're overall these past couple of days after this pull down, you guys can see it here, we're starting to find support at 39, $40. One day we held it to, actually no, 4 days. 1 day, 2 days, 3 days, 4 days. Now we're just looking for the breakout. And I think that is, I don't want to say for sure because nothing's for sure, nothing's guaranteed, but I like that potential breakout for this week. Let's put it that way. And I have money in this, which is why I have money in it, because I think it's going to break out, guys, right? So that is SBE. And the last one here is Blink Charging, BLNK. This is one that went down 4% on Friday, and I said this on Friday's video. I'll say it again for those that missed it. I like Blink anywhere from $40 at the lower end. Honestly, at the lowest end, it'd be around $38, but anywhere from $38, $40, $42, I just like it. I think that's a dip buy on BLNK, as it could get back up to about mid-50s, high 50s based on this chart. And that could yield a big return, maybe 15, 20%. So that's it, guys. That's about 15, 16 stocks for this upcoming week. Let me know down below in the comments what stocks you're watching. What are you up to this upcoming week? And if you guys enjoyed the video, as always, hit the like button, subscribe to the channel. Make sure to get yourself 4 stocks from WeBull. Those are valued up to $1,600. All you have to do is deposit $100, and you get 4 stocks valued up to $1,600. And you could also get $30 from M1 Finance. That's free. All you have to do is open up an account, deposit any amount of money, and you get that 30 free bucks. Those 30 free bucks. You guys get it. Those are linked down below. Same with the Discord and the Facebook. All of those are free. I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Peace out.